Hi, people. Thank you for stopping by Building Wealth with Rajeev. We all know smoking cannabis can give us a high. But can we say the same thing about investment in cannabis stocks? Here's my chat with Emily Flippen, who works with Motley Fool in US. She decodes how, where, and why to invest in cannabis stock. Listening to this 30-minute chat can save you hours and hours of research from other sources. Pretty much like smoking cannabis, moderation might be the way to go for investment in cannabis stocks too. If you like the content, please make it viral. Also follow the channel for future updates. What are some of the companies you've liked so far, Emily?
I will say I tend to focus mainly on US companies, and I know everybody's going to be screaming home bias. And there's certainly an aspect of that I think can be true, right? You recognize the themes in your market more easily than you do in foreign markets. But I think that the Canadian companies in particular tend to be really overhyped. They tend to be really overvalued, actually, because they're the ones that are able to be exchanged on the New York Stock Exchange, the NASDAQ, right? They're reached on the major US exchanges, whereas US players are largely traded OTC, right? They're on the pink sheets, so they're harder to access. So we've historically seen, and that's changed a little bit throughout 2021, that the valuations for US businesses have been lower than their Canadian counterparts. But there's also a couple other factors that make me look at the US side. The one is, again, the growth opportunity. So Canadian actors largely operating and getting started in the Canadian space, now realizing that that market is not only kind of small, but it's also fighting against a lot of regulatory hurdles. So they start investing and moving elsewhere, right? They're going to Portugal, they're going to Latin America, other places in Europe. And then they're facing all of these challenges with their own capital and getting these expansions off the ground. And ultimately, not having the capital necessary to make that happen, pulling back their operations, downscaling their operations. And now we see a lot of Canadian cannabis companies, management's talking, they're saying, well, we're really waiting for US legalization. I'm like, okay, that's great. But then you come into the US if and when we federally legalize cannabis, and you're competing against a lot of US companies that already snatched up a lot of really valuable licenses and just brand awareness in the United States. So I like the United States for that. I also think regulations, again, being on a state level has provided some advantages for US players that the Canadian players haven't quite tapped into yet. And I also think that Canadian regulations have limited some of the branding impact that's available for these cannabis companies, whereas in the US, things like edibles, sweets, attractive branding, right? All of these things are still available to the cannabis companies. So I like to look at US-based cannabis companies, and I like to look at US-based cannabis companies that are led by management teams that I think are being really smart capital allocators. And it gets challenging to identify who those are. Again, good actions in the past don't predict future, but I will say I think that some actors have set themselves apart. Charlie Batchtel at Cresco, I think, is a great example. Ben Kovler at Green Thumb Industries, the Planet 13 management team. All of these people have a pretty good history of managing capital allocations for their shareholders in a way that has been accretive as opposed to dilutive.
Yeah, so I think, I think, Emily, would be good if we get, let's take just two companies, top two picks of yours. I'm not talking about recommendation at all. The companies which you like, which people have to do their own research. I mean, it's not a financial advice anyway, it's for education. So let's talk about first pick, like what are the company you're liking, you're really liking. We'll come to those hyped up as well, just so that so the investors get educated about that as well. But which company do you like? Let's talk about the first one.
Yeah, I'll throw out Green Thumb, I think, as a good example, and I'll caveat this later, because again, with all of these recommendations, there's inevitably going to be one or two yellow flags that are thrown up, and they're certainly there for Green Thumb.
It's not a recommendation anyway. I mean, it's just for education. People do their own research.
Industries is a really interesting case to look at. So Ben Clover, the CEO and co-founder of Green Thumb, his history, if you look back at his family history, his great-grandfather was involved in the ending of Prohibition. So he had an interest in this space just from the family history. And also, when we look at business or industries like Illinois, right, in Chicago, where Green Thumb is based out of, when they went about the legalization process, they did so legislatively. And it was the first state that we saw legalize cannabis recreationally using a legislative process. And Kovler was very much involved in those discussions. So we have a management team that knows the industry, has a passion for the industry. And I did have the opportunity to go out to Chicago, meet with him and talk with him. And one of the things that really impressed me, and this is going to sound counterintuitive, but during our conversation, he was extremely nervous. And I think a lot of investors say, well, that's not a good thing, right? When you sit down with a co-founder and a CEO, you don't want them being nervous about your conversation. But it was because he was not well versed, I suppose, in speaking to financial media, which, obviously at the Fool, it's largely what we do. And in a way, it was putting him a little bit outside of his comfort zone. And I like pressing leadership, right? I like when they're uncomfortable because I can ask questions that maybe push them a little bit more and you get genuine answers. But more importantly, so many people that I speak to in the industry are salespeople. In fact, they come on leading a business, right? Being CEO of a business, not because they have the chops necessary to lead that business, but because they're really good at selling a product. And I don't like being sold to. And so when I feel like somebody is trying to pitch me and sell me on their business, always ask that question, well, what are you covering up here? Kovler was much more focused on the business, cared a lot less about getting it in the eyes of the investors, right? Which is a great thing. It says to me, I'm not so worried about raising a bunch of shareholder capital that I'm then going to throw at projects and just see what sticks to the wall. I'm focused internally on how to manage my business. So I liked his perspectives on the company. I liked the way he handled our interview. So that immediately got me off to a little bit of like, okay, well, I'm interested in this management team. I have a bit of trust built up with this person. Now let's think about the business. And at the time, Green Thumb was one of the only businesses in the cannabis industry, and not just in the US, but across the world, that was operating cash flow positive. And that within itself is something to focus on. You'll see a lot of cannabis investors say, well, X company is profitable. Well, it's a little bit more nuanced than profitability because of accounting rules, specifically under IFRS. The way that you manage the assets, the inventory of the biological assets, that is the cannabis plant, can cause changes in the valuation of fair value, which management has control over, that can cause a company to look profitable while still not generating any cash. We saw this happen with the Canadian players. They were building up a ton of inventory, growing a lot of cannabis, recognizing those profits on the income statements, but then having to write them down later when they weren't able to be sold through. And Green Thumb at that point was the only business that was saying, hey, look, no, we're actually generating positive operating cash flow from our actual operations, not from these, I suppose, paper changes in the fair value of our biological assets.
And what I think the management team is one thing, Emily, which impressed you. What's the ticker symbol?
Yes, GTBIF is a ticker symbol. It's traded OTC, so that explains why it's, I guess, a longer ticker than maybe what most investors are familiar with.
No, I think it's fine. And what besides management, I think this is a good, the accounting thing is, which you've highlighted, is pretty good. What are the other things this company is offering in terms of, balance sheet, or in terms of product reach, reach, or wherever the sales team, what does it offer?
One of the things that I think, another thing that it sets it apart is its focus on premium value, but also doing wholesale revenue. And we've seen companies say, I'm either going full premium or I'm going full wholesale. And betting 100% in one or to the other tends to be a losing value proposition because they ebb and flow in terms of the demand in the cannabis market, right? Sometimes you're able to sell through one, but not sell through the other. And Green Thumb has done a good job of, again, keeping up its profitability, keeping up that operating cash flow by selling really high value products. So these are derivative products that come with a premium branding that more frequent consumers can associate with, while also still selling through wholesale any extra inventory that they've been able to produce. So I think that has been particularly impressive with them. Again, this may change in the future. One of the things that I'm interested in but concerned about when it comes to Green Thumb is they've been aggressive at expansion. Historically, they were slower to expansion than a lot of their counterparts, right? MedMen at the time, just throwing capital everywhere. Green Thumb set itself apart by saying, we're going to be really smart in how we deploy capital, where we build out retail stores. But as competition has heated up, as businesses have set themselves apart, Green Thumb has realized we maybe need to go out against these licenses in places like Pennsylvania or New York or Massachusetts more aggressively than we have been in the past. And that's going to take some upfront capital. And that's going to mean that we have to do things like build out grow facilities in new states like Pennsylvania. That's a lot of upfront capital. That's a lot of inventory that they then have to sell through in a state where they weren't operating previously. I'm hopeful that they're going to be able to do that, but also very aware of the fact that, hey, Green Thumb's thinking this. Every other major US multi-state operator is also thinking about this as well. And that can lead to a situation where we have oversupply in some certain states, the same way we did in Canada. So there's certainly issues. And I want to see a company that's expanding aggressively, because I think aggressive expansion is what you need to succeed. But I also think wise expansion is important. They've done that so far. Whether or not they'll continue to make those wise capital allocation decisions, I think is still TBD.
And it's a profitable, the company is profitable at the moment?
Yeah, so operating cash flow profitable. They've generated periods of free cash flow as well. In terms of their GAAP profitability, it does tend to change period over period, again, because I mentioned of the changes in the fair value of the biological assets, which can be a little bit weird when it comes to the cannabis space, which is why I mainly focus on things like the cash flow statement.
Let's go to the second company, Emily. Which one will you are you really studying and you really liking?
Yes, I'll throw another one out there that I think is interesting. It's hard to pick, again, just pull out a few because they take really unique approaches. But one that I think has set itself apart in terms of its approach in comparison to Green Thumb that's worth mentioning is Planet 13 Holdings.
Okay.
Planet 13, are you familiar with the business?
Cannabis, not so much, Emily, not so much.
This is an interesting one. And I will say I have some caveats around their management team.
Yeah.
Also some caveats around Ben Culver that I didn't mention. Both of these businesses, as is the case with most US-based cannabis players, their management teams have close relationships with regulators in their states. There's always going to be an argument to be made, and we see this happening with Green Thumb right now, that there were bad actions leading up to handling their licenses. Given the very close connection of Planet 13's co-founders and their leadership with the real estate developers in the Las Vegas area, I think that there's an argument to be made there as well. That's just an awareness that I think investors should have in mind. But Planet 13 is a cannabis business, got started in Nevada, in Las Vegas, built out what they called their superstore, and I still believe still is the largest dispensary in the world right now. And again, not all of that's operating. They brought out a big pot of land and then built out a very small portion of it with the idea of expanding later. They liked that title, didn't they? But the idea was we're going to specifically focus on the tourists that come to Las Vegas and want to engage in a more premium experience. And again, this was a business that was operating cash flow profitable really quickly. And their management team, their two co-founders, very focused on their earnings per share and how each action they do will be accretive to earnings per share in the future. So they focused by building out this one big store, as opposed to MedMen or Trulieve or even Green Thumb that were picking up licenses and putting stores on every single corner. Green Thumb said, no, we want this one big store. We want a really impressive brand, but more importantly, we want an experience. So when every tourist comes to Las Vegas, they have to go to Planet 13. It's the one thing you need to do in Las Vegas. So they have things like a bar and a pizza parlor inside their dispensary, in addition to the actual sales floor. They have event space. They have their own distilling station where you can see the cannabis being extracted, right? Watching that process take place. And long term, their hope is to turn that into a consumption lounge. Las Vegas has been on the fence about whether or not they're going to legalize consumption lounges. But if that were to happen, Planet 13 is in a good position to immediately expand on that within their existing footprint. And they had this model, and the model was performing well. This is a smaller business in comparison to the cannabis operators that you may be familiar with. And they said, okay, well, we're going to pull out 8 or 9 key tourist markets in the United States and specifically target those markets for expansion. So they went to Santa Ana, California, not too far from Disneyland next. That may seem like an odd choice. They do get a fair number of tourists. I think part of that decision was because Santa Ana is not too far from Las Vegas. So there was some brand spillover, right? Las Vegas gets a ton of people driving out from California to visit it. They were bringing back their awareness of the Planet 13 brand. So they built it out there. They just opened that this year, I believe a few months ago was its grand opening. It's performing up to expectations, even after it got pushed off due to COVID, in which they obviously weren't able to actually develop that land. But they now picked up licenses in other states, the most interesting one being Florida. Florida does not have a recreational market right now. It's 100% medicinal. So when I saw that news, my first thought was, okay, they're going to, if and when Florida legalizes recreational cannabis, they'll be well positioned to roll out another big superstore there. But they actually picked up a number of smaller licenses with the intent of building out smaller footprint stores until recreational happens. And I don't know how I feel about that. I'm still marinating as an investor myself about whether or not I like the idea of them going up toe to toe with big businesses, Trulieve being the biggest one in Florida, really maybe diluting their brands by pulling out smaller retail stores. But in terms of the financial performance of both their Las Vegas store and now the early stages of their Santa Ana store, impressed with the strategy and the brand that they've built up by taking a premium approach. And again, that has resulted in better financial performance.
Well, yeah, I think it's debatable, isn't it? The second strategy which they're taking by going into kind of non-core areas, but I think they probably want to be looking to capture some market and then build on it. Never know. I mean, it looks a bit. I mean, I'm with you on that. I'll be a bit skeptical on that mode. And this company is profitable, is it, or cash flow positive? Actually, I'm really grateful to you for suggesting a place in Vegas for me to go. So next time when I'm there, I'm definitely going to go there. And there are pizza, there's the drinks and cannabis. I think it's worth a day, I guess.
I did indulge in the pizza when I was there myself, and I will say it was better than it deserved to be.
Really? Oh, nice to know that. I think probably I will take my children there though. So I think these are the companies, Emily, you're positive on. Again, people should do their own research. But any companies, which are fads out there, which you personally think are, guys, it's media bullshit, and just walk away from them. Don't waste your money.
Yeah, I'm probably going to get some flack for this, and I love to have debates about it. So I welcome opinions that are different than my own. I will say virtually all, not all, but virtually all Canadian players, I'll call out a few in particular, Tilray and Aphria and the merger that's happening there, as well as Aurora Cannabis. These have long been businesses that I've specifically called out as businesses that I'm not interested in investing in. And there's been a few reasons for that. Tilray obviously was probably the definition of the hype child of the cannabis industry. Financial media during the peak legalization in, I believe, October 2018-ish for Canada, they had a Tilray watch on their TV screens and on their pages, where it was just leading retail investors to pump up a stock that ultimately, whose valuation had nothing to do with the underlying fundamentals of the business. And in fact, Tilray has been the poster child for mismanagement. Again, this was a business that took a lot of shareholder capital and then spent it all, and they kept diluting shareholders without actually turning any of that into sustainable revenue. And the same can be said for Aurora. Aurora spent a ton of money making extremely expensive international acquisitions that enriched the people who were making those acquisitions. So lots of insider trading there, or I should say related party transactions as a part of those acquisitions, again, enriching the shareholders, they should say the management team, at the expense of the shareholders. And the result has been a share price that has just plummeted, despite the fact that it's still one of the most widely held cannabis companies on the market today. If you look at stats for apps like Robinhood, it's still one of the most widely held stocks within the Robinhood app. And that's because it was the one that got all the financial media attention. And Aphria is an interesting case. I think it's probably the one where when people hear it, they say, "You're wrong" to me the most. And that's because this has been one of those businesses that has been profitable, and they never generated operating cash flow. Again, this is a business that never generated any cash, but was profitable because of these accounting rules, which allowed them to adjust the fair value of their biological cannabis assets before they had sold them through to the end party. And so it led to them to look really profitable, but in reality resulted in actually no cash that could be accretive to the shareholder. And they spent some of this money to acquire a distribution service in Germany with the idea of saying, okay, well, we're going to use this distribution channel, this medical distribution channel, to give out medical cannabis. And they certainly have used that. But here's the thing about the distribution acquisition they made in Germany. It makes up nearly 50% of their revenue. It has very, very low margins, but that's not connected to cannabis at all. So when you look at just their top line and say they're doing XX number in cannabis sales, well, you have to take that number and cut it about in half, because the other half of that is just other pharmaceutical sales that are happening through their distribution channel in Germany. So there's a lot of nuances, I think, with some of these businesses that investors maybe aren't aware of, because they just keep getting told by financial media and people who are otherwise uneducated on the subject, saying, they're great buys, they're profitable. And it kills me every time because they're not. So what I will say is if you are invested in a business, have a thesis behind why you're invested, whether it be the Canadian companies, whether it be the US companies. Write down the reasons why you are buying the stock. And it cannot be, I think the stock price is going to go up. That's not a thesis. Write down what you think is going to happen, how they're going to achieve their goals, and then watch the business over time. Don't watch the share price, watch the business. Give it 3-4 quarters, give it a few years, watch your list, right? Do they execute on their plans? That's how you should be making your buying and selling decisions, not based off whether or not the stock has gone up or down 20%, because these cannabis companies will move that much on little to no news.
Yeah, I think that brings me to another thing, Emily, which is like we have SaaS players, right? And with the SaaS players, we have come out with the new measures for them. ARR, price to sales ratio, the valuation measures. I think we've come out with their growth rates, and obviously they're reinvesting in the businesses. They have no earnings. Is there anything happening with the cannabis players? A set of sleuths of measures coming out, which are very exclusive to cannabis
I don't think
players?
there's any valuation metrics that have been exclusive to the cannabis industry, but the cannabis industry is not unfamiliar to some of these, I say, new age financial metrics. The biggest one in the cannabis industry is definitely adjusted EBITDA. You won't hear businesses and earnings calls even talk about their bottom line or anything below adjusted EBITDA. Adjusted EBITDA has become the de facto bottom line. And it's frustrating, again, because a lot of times they'll back out stuff that I don't think investors necessarily should be backing out. One-time charges that end up being recurring in the case of cannabis industries, especially if it's part of their growth strategy. So having positive adjusted EBITDA has become the baseline for whether or not a cannabis company refers to themselves as sustainable, whether investors refer to them as profitable. So that by far has been kind of the metric to use, right? Like the price to adjusted EBITDA. Personally, I much prefer to look at free cash flow. That's not exclusive to the cannabis industry. If I am going to look at metrics, and I'm not much one of a person to look at metrics, but if I am, I'm going to be looking at something like price to free cash flow and forecasting based off my perceptions of their ability to generate free cash flow in the future. That's a lot more fun to do when you're looking at high growth style businesses than it is when you're looking at the cannabis industry. Not just because making those forecasts is virtually impossible without clear regulatory guidelines, without having a clear picture of what the landscape may look like, but simply because this is such a low margin industry. And even the winners in space are going to be low margin winners. They will generate free cash flow, but it's not going to be 20 or 30% free cash flow margins like you get with software businesses, or even 40%, right? We're talking probably single digit free cash flow margins, maybe, low teens if you're lucky. So those sorts of I guess, valuation metrics put into perspective the opportunity. Investors come into the cannabis space thinking, I'm going to be a millionaire by buying this penny stock. No, you're not. What you're doing is you're buying at what will be best, a very low margin business. You can still beat the market with that, right? Like you can still get in earlier stages. You can still make a decent chunk of money, but it's not going to be fast. It's going to take patience and it's going to take discipline.
So if I have a choice between a matured cannabis business and a matured CPG business or a mature tech business, look, I'm talking about the unit economics, and if talking about low gross margin business, reinvestment, it looks like very capital intensive world to me.
It somewhat is.
Yeah, so with this kind of business, can we beat Nasdaq? Can we get 20%, 25% annualized? Is it possible over 10 years if I hold the stock for 5 to 10 years?
I think if you set your portfolio up with the right mix of what will probably be low margin winners alongside what I call ancillary plays on the cannabis industry. I do think there's probably going to be a handful of pure play winners that end up creating that 20% annualized return for the next 10 years. I don't know what those businesses are today. So the best thing I can do is call out the businesses that I think are run the best with the best metrics currently, right? In terms of economics, not PE, right? The best metrics for their internal business and forecasting that out, right? Very loose. However, that's going to be a lot riskier than if you look at other players in this space. I think the opportunity there for outside gain is probably greater, but also look at what I call software plays, right? So ancillary plays on the cannabis industry. We have businesses that are not necessarily plant touching today, as in they don't grow or sell the plant, but they are still benefiting from the rise of the cannabis industry. And this is where I personally get the most excited when I talk to cannabis investors. Probably the biggest example of this, which is likely going to be no secret for anybody who's listening to this who has followed the cannabis industry, is Innovative Industrial Properties. They're a REIT. It was originally a 7-person team, so a very small REIT that was realizing there was a hole that was not being met for these cannabis operators. And what they're going to do was saying, hey, you can't have access to banking. So we're going to come in, we're going to provide sale leaseback transactions on the real estate that you've purchased to grow and sell cannabis, and then lease it back to you under these really lucrative, triple net long-term lease agreements. And because it's a REIT, they pay out a steady dividend, right? That free cash flow being distributed to shareholders as legally required in order to retain their tax exempt status. So that has been very lucrative, both in dividends and capital gains for investors to this point. There's more speculative plays. One that I'm interested in, I should say two that I'm interested in. I scratch my head on them a bit, but it's a fun scratch, is Weedmaps and Leafly. These are both software companies that are targeting retail distributors, right? They're app-based businesses that allow average people who have access to medicinal or recreational cannabis in their state buy and sell or purchase cannabis digitally. And they can leave reviews while also providing merchant services. So things like logistics and distribution. You can almost imagine it as, not to overplay this example, but as Shopify version for the cannabis industry, specifically tailored for those businesses. That's interesting. Again, not plant touching, but if it succeeds, it has the potential to have software-like margins, which would be insane because every additional purchase on the platform ends up being accretive.
This is really great. I mean, Shopify of cannabis. I mean, that's something
it's
that
been a term that's thrown around a lot. I feel bad using it, but I think it's a good kind of immediate example that a lot of people will identify with, like, oh, I understand what they're trying to do. There's differences obviously in the business model, but it kind of what it boils down to.
So it's going to be cannabis as service model. So what percentage of the portfolio should cannabis be? I mean, for a reasonably investor who can take some risk. I'm not talking about index fund investor, but somebody who likes making equity portfolio. What percentage of portfolio should be cannabis or could be cannabis?
I'd say less than 10%. And I also caveat that 10% with the acknowledgement that that's not pure play cannabis companies alone. I'm talking about the ancillary plays as well. So that's including the innovative industrial properties, including the Constellation Brands, which has, investments in cannabis companies, including the pure plays, including the Weedmaps or the Leaflys. So any business that I think whose growth is going to be largely dependent on the cannabis industry should be included as part of that 10%. So just because you have a business that's not plant touching, if they largely serve the cannabis industry, then that's a huge risk, because if the cannabis industry goes to nothing, of which it could, nobody knows. Again, there's nothing preventing it from the federal government coming in and saying, nope, flipping that switch. You want to be sure that you're still in a good position, that if that happens, you're not going to be financially devastated. So in my opinion, at a max, 10% of your portfolio, and we're talking about somebody who's very risk-taking, maybe younger, right? They have a very long time horizon. I think if you're an older investor, somebody who's looking for dividends, somebody who's not necessarily interested in holding these stocks for more than 3 to 5 years, then this is probably not the place to be investing, especially not in the pure plays.
All right, cool. I think that's really useful, because looking at our newspapers, looking at Twitter, it sounds like the money will come out of the computers if you put money in a cannabis. Trust me. I mean, that's how
crypto now.
Yeah, I mean, C for crypto and C for cannabis. Cannabis versus tech, for example. I have a choice as an investor, and so, I mean, does it give me any additional alpha? Can cannabis?
I will say this. I always tell investors, you can do perfectly well for yourself having never invested in the cannabis industry. And I think if you do invest in the cannabis industry, in order to get the alpha that you mentioned, you have to have a long-term time horizon, and you have to take a basket approach. I think you're not setting yourself up for success if you plan on investing in a business for a matter of months or even just a year or two. And you're not setting yourself up for success if you're picking one or two businesses and determining that they're going to be the winners. I'm convinced at this stage in the industry development, we don't know who the big winners are going to be. You can make an educated guess. Again, we can go through some of the factors that I think set a business apart. But with all of those factors, I think there needs to come with a level of skepticism, right? Stuff can go wrong that you are never going to be able to predict, largely because regulations, especially here in the United States, have not really developed yet. So I think that within itself is going to be a factor that a lot of investors hear and they say, it's not for me. And I always say, that's perfectly fine. Personal reasons, personal values, skepticism, again, amongst the industry, a short time horizon, all of these things may turn you off the cannabis industry. With that, I would say, if you have an otherwise diversified portfolio, you can invest in other great businesses that will provide you better opportunities. But for people who do have that long-term time horizon, for people who can maybe take their emotions, more out of the investing decision, I do think there's opportunities in cannabis to really set yourself apart, right? Beat the market with these types of investments.